8 assets that make people rich and never work again. Within the realms of personal finance and investing, the holy grails consist of achieving financial freedom, passive income, and positive cash flow. If you can accomplish these milestones, it may be the difference between living a life that is tied to a 9-to-5 work and living a life that is free to follow your other interests and passions. Imagine a life in which your assets generated enough money to support not only your necessities but also your wants. This would be a life in which your assets work for you. Each asset class presents its own distinct set of chances for the generation of wealth and the maintenance of long-term financial stability. These opportunities range from standard investments, such as real estate and stocks, to less conventional channels, such as intellectual property. Our discussion in this piece will focus on 8 different categories of assets that can assist you in achieving your monetary objectives. 8 assets that are enabling people to achieve financial independence. Number 8. Rental properties with a consistent income potential in real estate. Since the beginning of time, real estate has been an essential component in the process of accumulating wealth. Property that is rented out, in particular, has the potential to generate a consistent flow of revenue that not only pays off the mortgage but also leaves you with some more funds. The most important thing is to make investments in real estate in high-demand areas where you can charge competitive rentals. Your equity will increase over time as you pay down the mortgage, and your potential income will also increase as a result of this. Number 7. Stocks. Growth over the long term. Companies can raise capital by selling shares of stock, also known as equity, to investors through the stock market, which serves as a venue for this activity. Voting rights and a residual claim on the earnings of the corporation in the form of capital gains and dividends are both afforded to shareholders through the ownership of stocks. Investing in the stock market provides the opportunity for both the possibility for long-term capital growth as well as the power to compound gains. Even though the market is prone to volatility, a portfolio of equities that is well diversified has the potential to generate substantial returns over the long term. It is possible to amass wealth in the stock market over an extended period by employing either an investment strategy or a stock trading technique that boasts an advantage by utilizing the power of compounding accumulated capital gains. If you want to avoid taxes eating away at the growth of your wealth, the easiest method to achieve this is in a tax-deferred account. Number 6. Regular interest payments and a lower risk are 2 benefits of bonds. When compared to stocks, bonds are generally regarded as having a lower level of risk and delivering consistent interest payments. Those individuals who are seeking a more reliable source of income may find that they are a fantastic choice to consider. The most prevalent forms of bonds are those issued by corporations and governments, and each type has a unique risk and return profile. Bonds have the potential to act as a counterbalance to portfolio components that are more prone to volatility. Over time, compound interest can grow at an exponential rate, allowing your money to create more money. Number 5. The relationship between business ownership and the appreciation of capital. The ownership of a business has the potential to be one of the most satisfying ways to amass riches. Not only do you have the opportunity to generate revenue from the operations of the business, but you also stand to benefit from the value of the firm as an asset. The most important thing is to construct a company model that can function well without your day-to-day involvement, which will result in the generation of passive revenue. This is true whether the firm is a traditional storefront or an internet establishment. Number 4. Intellectual property includes royalties from patents, copyrights, and other forms of intellectual property. Ideas, innovations, and creative expressions that are based on which there is a public desire to bestow the status of property are what are referred to as intellectual property rights, IPR, according to one standard definition. To enable the creators or inventors of a property to gain financial benefits from their creative endeavors or reputation, intellectual property rights, IPR, grant them certain exclusive rights to access the property in question. Protection of intellectual property can take several forms, including patents, copyrights, trademarks, and other similar legal mechanisms. It is possible to generate passive income from intellectual property, which includes patents, copyrights, and trademarks, which can be a goldmine. After developing a valuable intellectual asset, you can grant licenses to other people and receive royalties from such licenses. It may be a book, a piece of software, or simply a catchy jingle. The important thing is to come up with something that is one of a kind and valuable, obtain legal protection for it, and then license it out. Number 3. High returns from private companies are the focus of private equity. High returns can be obtained from investing in private enterprises, which are frequently higher than the profits obtained from publicly listed equities or bonds. On the other hand, the risk exposure is significantly higher, and the investment is typically not liquid. From venture capital investments in new businesses to buyouts of established corporations, private equity can encompass a wide range of activities. Due diligence is necessary in this situation because the management and business strategy of the company frequently determine whether or not the investment will be successful. To be able to invest in the majority of private equity opportunities, you also need to be an accredited investor. Venture capital, private equity, and hedge funds are examples of private market instruments that are only open to investors who have been granted special permission to invest. Private investments, in contrast to publicly traded equities and bonds, are not registered with the Securities and Exchange Commission, SEC. Number 2. Dividend stocks deliver a consistent income in the form of dividends. Shares of a corporation that distribute a portion of its profits to owners in the form of dividends are typically referred to as dividend stocks. Alternatively, these dividends can be cashed out as regular income or reinvested to purchase additional shares. The power of compounding can be utilized to cultivate wealth through the use of reinvested profits. They have the potential to be an excellent source of consistent income, and many investors utilize dividends as a means of supplementing their income during retirement. Businesses that have a track record of paying dividends are typically more stable and less volatile than those that do not, making them an excellent choice for investors who are looking to minimize their risk exposure. Number 1. Cash flowing assets. Any asset that generates more income than it costs to own will be considered a cash flow asset. Assets that generate cash flow are the very definition of passive income. Maintaining these assets, as well as generating a consistent revenue stream, requires very little effort on your part. For instance, there are self-service car washes, vending machines, laundrettes, and websites that generate cash through advertisements. Identifying assets that have a high ratio of income to maintenance costs is essential to guarantee a positive cash flow that may be generated. Individuals can reduce their dependency on traditional employment by diversifying their investments across a variety of assets, which allows them to generate different sources of passive income to supplement their income. However, before investing in these assets, it is essential to carry out extensive study and seek the guidance of a specialist. In conclusion, it is feasible to achieve financial independence and eliminate the need to ever work again by making strategic investments in assets that create passive income and cash flow. Some of the most important assets that can assist individuals in accomplishing this objective include real estate, equities, bonds, ownership of a business, intellectual property, peer-to-peer lending, royalties, and dividend-paying life insurance plans. When it comes to mitigating risks and maximizing rewards, it is necessary to properly examine each asset class and diversify investments simultaneously. Achieving financial independence and enjoying the benefits of a life without the need to work is something that may be accomplished by persons who employ the appropriate tactics and take a disciplined approach. Through the use of a diversified asset portfolio, it is possible to achieve a life of affluence and financial independence. There are several different asset classes, each of which can promote your economic independence from employment. These asset classes range from investments in brick-and-mortar businesses to holdings of intellectual property. The cultivation of numerous income streams, the mitigation of risks, and the paving of the road for a financially independent future can be accomplished through the strategic allocation of resources across a wide range of investments and assets. So this is the end of our today's video. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.